Well, just give me a minute. I'm just going over through the stream if everything is working fine. Yeah, everything should be good. Yeah, everything should be good. All right, so welcome to the live stream. Actually, my first live stream on YouTube. So today we'll discuss on what my expectations are for the upcoming week. We'll also go over all the potential setups we did have in the previous week as well. Right, so okay, so we have Abe in the chat. Welcome to the stream, Abe. Nice to have you here. We're doing good. All right, so as usual, and this is how I analyze my charts, I usually begin with dollar index. So move on to the weekly time frame, and then we can see where dollar index is most likely to move towards. So the weekly chart, right? The weekly chart tells you the clear high probability direction for the week. So in this case, you only need to focus on the previous week's highs and lows. So you would have previous week's low here, and you would have previous week's high here, right? So we have actually closed above previous week's high. So which means when the next candle opens, the highest probability draw for price is going to be this particular high. So if you mark this out right here, this could be the draw for price for dollar index. Now here's where you might be a bit confused regarding this bearish fair value gap, right? So we do have a bearish fair value gap right here. And you might consider that since we have a bearish fair value gap, we have taken out liquidity right above here. Price should move lower, right? But that's not exactly how it works, because every fair value gap which is presented, it doesn't mean it has to follow through with it. So in this case, let me explain why price is not really going to move lower from here without taking this high. So we have a clear defined range, right? We have this low right here and this high right here. So the first thing you always do when you have a clear defined range, or in this case, it's a dealing range because we have taken out liquidity below this low as well, right? So we have sell side liquidity where price has taken it out. So we have a clear dealing range low, and this is going to be your, give me a second, this is going to be your dealing range high. So we have a clear defined range. So when you plot out your premium and discount with this range, you know that once price takes external liquidity or buy side liquidity, whatever you want to call it, it's going to move towards the 50% of the dealing range. So that is where we have, right? Now, has this fair value gap played a role in price moving lower? It clearly has. We can see that price in the week before the previous week, we have moved into it, expanded lower, and the previous week we have an open high and price moves lower, taking out its previous week's low, right? So it has fulfilled some sort of objective while moving lower, which is what this fair value gap is supposed to do. So price has done that. So this current week or the current past week, price opens, moves lower, expands all the way through, closing above previous week's high. So this is a clear indication that even though we have equal lows here, and this is the clear difference between trading with patterns and trying to trade with clear logic. So price is closed above, so which means that the draw is going to be easily this high right here. Okay, so if you want to visualize in terms of open, high, low, close, you would have your open, a small low, or you would have an open, a small high where price takes up this high, and then price could expand lower to these equal lows and close, or it could open, form a small low and expand through this high and close somewhere here. So you have about a couple of scenarios that can take place. So your job is not to determine which scenario is going to occur before the week begins. Your job is to determine which levels price is going to draw towards and take advantage of that. So in this case, depending on what the day of the week is. So if it's going to be on a Tuesday, where price opens on Monday, let's say it doesn't take out this high, it just consolidates here. So on Tuesday, we can expect price to probably take out this high, and then that's going to be a high probability high of the week because we have a Judas swing above the weekly open, and then we can expect price to push lower. But what if price opens here and probably on the daily time frame, we have a fair value gap presented, price gets into it. Let me just go there, probably see if we can outline the scenario clearly. So this is the daily time frame. So price has taken sell side here. I stand corrected regarding these equal lows, but after price fulfills the objective higher, it is going to treat these lows as relative equal lows then, right? So staying on course here, if price opens here on Monday, forms a defined range this way, right? And we have a clear engineered Monday's high and Monday's low. So on Tuesday, if price pushes lower, takes out Monday's low, moves into this daily fair value gap, we can expect on Tuesday or Wednesday to continue through and take out this high, right? Which is our weekly objective, which we just outlined on the chart. So this is a scenario that can occur, right? But what if Monday consolidates and Tuesday price opens, pushes higher, right? It takes out buy-side liquidity. Then we can expect Wednesday to move lower, and we have engineered lows right here, engineered liquidity. We have daily fair value gap, and price can push lower once again, and you can be bearish for the rest of the week until the current dealing range's objective, which is your 50% level, is not met. All right. So that's basically how we're going to work through this. And then that's basically how I work through this, because that is where you can clearly determine when is the high probability condition going to set up itself, and when you can take a trade, and when you are not supposed to just push buttons and just wait for these conditions to present itself, right? So these exact conditions I just outlined, that is exactly what I want to see moving forward to dollar index. So hopefully that's clear. So let's move to Euro USD. Start with the weekly time frame once again. And there was a tweet where I mentioned that I'm bearish for the week, and I'm sure you might have seen it, but if you haven't, I was bearish on Euro USD, and we targeted this particular low, which is right here. And this was quite simple. And once again, we use the same logic of fair value gaps, where a fair value gap right here on the weekly time frame, it has pushed price higher to meet a buy side objective. So in this case, we have a clear defined weekly high and another weekly high as well. So we have engineered liquidity right here. So price pushes it into a weekly fair value gap, which means for this fair value gap to play out, it needs to reach some sort of buy side objective. And the buy side objective was these two equal highs, or previous week's high in this case. Price meets it, and that is when we were bearish, right? So that is when I was bearish, and we would stand for the community in where I host daily live streams. So you can join that, which is in the description right below. But staying on course here, price takes out buy side liquidity, right? So it takes it out right there, and we have this low right here. So if you were pattern trading here once again, you would probably see range lows being taken out, and you would probably wait for range highs to meet next, right? But that's not really how it works. Price clears out buy side liquidity. We have a clear defined structure where we have engineered liquidity all the way here. And price should push lower, right? Now, why does it need to move lower? Why did price not expand higher? A clear, simple logic. Once again, just as we used the premium and discount for dollar index, we just define the premium and discount here for Euro USD. And this is your swing low and this is your swing high, right? You can't, this is not really a dealing range high and low because we've not taken buy side liquidity here, nor here, nor sell side liquidity here. So whenever we take buy side or sell side liquidity, that is what qualifies as a dealing range. So in this case, price has a clear defined range. We have taken daily lows here and we have taken daily highs as well. So this is a small swing range. Price has moved lower into discount first, right? We have taken out this low right here and moved higher. So this is not really good for us because we have clear discount array presented itself, right? So we have a daily fair value gap right here, which is your discount array. And that is where our draw was for price, right here. Because this low right here, it doesn't fulfill the objectives lower, right? We do have an objective lower, which is your daily fair value gap, which is a clear gap right here between 1, 2, and 3 candles right here. We do have a daily fair value gap here as well. But the easiest way to go about it is to just target the gap which is closest to the 50%. All right, it needs to be below, but it needs to be closest to the 50%. So price pushes higher, clears out buy side liquidity, and now we can expect bearishness lower. Now, did I expect Monday to form the high of the week? Not really. But when price pushed lower, especially on Tuesday, that gave me the sign that we are going to head lower. We also did have an inversion here as well. So you have a bullish fair value gap, which is turned as bearish once it closes through. So we have Thursday, which opens and moves higher. That is where we were bearish and price pushes lower to take out all of these engineered liquidity pools into this daily fair value gap. This is your high probability move for the week, right? So Euro USD, what is my bias moving forward? I just explained this in the university as well. Once price expands, we are going to consolidate, right? That's just how price works. We expand, then we consolidate, expand, and then we consolidate. So in this case, you can see we expanded, so we consolidated. Since we had a larger expansion, we had a larger consolidation. So in this case, if price is going to retrace from here, if it's going to retrace from here and probably start to move higher, then it's probably going to get towards, once again, the 50% of the current dealing range, which is going to be right about here, all right? So that's basically how price works. So in this case, what is my expectation for Euro USD moving forward? I would remain neutral, but I'm going to lean towards bearishness in the beginning of the week because just as I explained on dollar index, we have a clear buy side liquidity right here. So for price to get there, and since dollar index and Euro USD are inversely correlated, we could probably push lower to fill this daily fair value gap or probably even lower to this daily fair value gap, all right? So that's basically how we're going to go to. All right, do you trade gold too? Yes, I do, but not as frequent as NASDAQ and Euro. Right, so moving on to GBP USD. This was quite clear and this was a clear, easy move as well. So we had buy side liquidity taken out here and we had, you can call this internal buy side, was taken out right about here. So price has taken them out and we have clear engineered liquidity, right? So this is hands down my favorite concept in all of trading, which is going to be your engineered liquidity pools. Price engineers liquidity perfectly and retail sees this as some sort of patterns. So they would probably see this as a triangle and they would see this as a breakout. That only works in hindsight. It is not going to work in real time. What will work is your engineered liquidity pools and your fair value gaps, right? So in this case, we have, once again, defined range, discount just by looking at this range. So when you plot a dealing range, don't focus on this part of the move, right? Just try to visualize before price gets here. Just try to visualize price from here. We have a clear defined range and you don't need to plot the dealing range low from here. You can also plot it from here, but I usually like to plot this low right here because this is where the move began, and we did take some sort of internal sell side liquidity as well, right? We took some daily lows, and that's what pushed price higher. And we have another move higher once again. So we have clear expansion. You can see this as well. Expansion. We have consolidation. We have consolidation still, and this is your expansion once again. So price to take out buy side, and it took out internal buy side here as well. And that is when we were bearish. And I was bearish all the way from here, but price to take it took its time for about a week, and then it started moving, which is the previous week. So clear easy target as well. We do have a daily fair value gap right here in discount, which is where price needs to move towards, and that is where it did. And the same goes here for GU as well as EU. We are going to be cautious once price has expanded through, and we are going to wait for price to consolidate. If you move to the weekly time frames, you can clearly see that we are bearish on GU, right? So we have a clear defined range high, and this is where your range highs and lows do work. And we have a clearly defined range low. We also have a low right here, which is where price should draw towards, right? So what do we have here? We have price taking out range high, and we have clear manipulation. Manipulation right above these equal highs. So when price is going to move in a particular direction, it's going to be in terms of accumulation, manipulation, and distribution, right? So we have all of this accumulation right here, and this is fractal and works on all time frames. So we have clear accumulation here, price is manipulated higher. We have push lower, closing below this opening price, which is your change in state of delivery. Price pushes back in to premium. We take out this high while revisiting this fair value gap, right? See, price did close through, and that is when, if you're trading patterns and you were not able to spot that external or buy side liquidity has been taken out, then you probably be bullish here. But price has opened, pushed up higher, took out previous week's high right about there, and moved lower. So right now, your bias or my bias on the weekly time frames is bearish, and I will expect price to get to these lows and then eventually to these range lows as well. All right. So let's move toward NASDAQ. So just for a quick brief through about what I trade primarily NASDAQ in New York session, and that is what I stream as well. And I also trade Euro USD during London, and that is where I stream as well. All right. So it's Euro USD during London and NASDAQ during New York. I'm more interested in NASDAQ as price moves pretty quickly. So I'm more inclined to trade NASDAQ, but Euro USD does take its own time, but it does deliver the setups as well. I have been trading gold recently too, but not really my favorite pair or pair of choice because it rather moves quite quickly, and I'm used to the structure on NASDAQ more than gold. Right, so once you do get used to a pair, it's quite difficult to transition to a new one. NASDAQ, we have pushed into this weekly fair value gap right here, which is also a monthly level. So price did take out all of these regional liquidity lows, and I did call price all the way from here to here. What I did call was this aggressive expansion. I did expect a retracement and then a move lower, but price didn't really give us that. It just expanded quite aggressively. But since we did watch price get into this fair value gap, you can see engineered highs as well. So we have a rather aggressive move. So what's my bias for NASDAQ? We have pushed higher into prices we have not seen before. So trying to catch a top right here would not be the wise thing to do. So I would expect price to probably push higher once again and wait for price to form some sort of topping structure. So what are these topping structures? Exactly like this one. Where price expands, consolidates, engineers liquidity, takes out one side, manipulates, and then expands lower, probably to these fair value gaps, or probably to this low as well, right? So this is the topping structure which I'm expecting price to fall. So trying to call out this high right here, or probably trying to short here and hoping that price would move lower is not the way to go about this. I will wait for price to form a topping structure, especially in the weekly time frame, and then probably price is going to move lower, right? So moving to the daily time frame, and you can see it right here, we've taken our previous week's high. So once again, daily time frame. So price has taken out Monday's high right here, and it also moved into this daily fair value gap, filled it, and then moved higher. This was a Thursday or a classic Tuesday low of the week, weekly profile. And this doesn't really mean much in correlation to the weekly time frames, because we have just filled this gap, we have pushed higher, we just have a high formed, and we have pushed lower. We've not really taken out this low, and the structure is still bullish. All right. So just to keep it simple, we are leaning bullish on NASDAQ moving forward in the next week. Same goes for ES. We have expanded all the way through, and price has moved pushed lower, and we have a clear defined low here as well. So you have Monday right here. So your Monday's range. Monday's highs and lows are quite important. So Tuesday takes Monday's low. We have a clear defined manipulation right here. Price expands on Wednesday and Thursday. Friday is an aggressive retracement, and you can see that we have pushed into this opening price or this down close candle. You can call this an order block. You can call this a change in state of delivery. Probably if you move to lower time frames, it will be quite clear. So in the 4-hour time frame, we have these down close candles. So this would be your change in state of delivery, which price did tap through. How does it look on the 1-hour time frame? Okay, perfect. So we do have your arrays here. We have a clear change in state of delivery right there. Your last down close candles before price expanded higher. This is where your swing trading would take place. We have a clear defined new week opening price. Price pushes lower, takes out liquidity, clear manipulation, closes through. This is your trigger. Price enters in. We have a fair value gap, pushes higher. Doesn't really take out Monday's high, engineers liquidity, pushes lower once again into this fair value gap while it takes out this low right here, which is your Asia's low as well. So you can see that based on time. So this is where your time and price works as well, and price expands higher. So for now, we have pushed lower. So we do have a clear defined open, low, high, and close, right? So this is how you visualize your weekly profiles as well. This is what I usually post on Twitter, but probably I will lean more into making videos rather than just images, because I can explain this quite better. So we have a clear opening price. We have accumulation, manipulation, and distribution, right? And then we have a retracement. So this is not enough to expect ES to move all the way lower. It's not enough to call this high to be a significant high for this month, or probably a significant high for a couple of months as well, right? So we did have Thursday during 12 p.m. close to New York, so at 11 a.m. around that, where price formed this high, and we did have a similar structure presented. Price pushes higher, we have a down close candle, we have a test into this gap right here, which is your bullish fair value gap, and price pushes higher, fails to do that, closes through. Price retests this fair value gap right here, and then pushes all the way low, right? So this is really how you use fair value gaps. You can't just mark them out randomly. Another beautiful example is this one right here. Price takes out Asia's low into an hourly fair value gap. It doesn't really get to these gaps right here. So you do have this low right there, which forms this fair value gap or probably this balanced price range. Price doesn't really get there because we have Asia's low, which is based on time. So price fulfills it, that is done, and then it moves high, right? So a lot of quite small details which do occur during the hourly time frames or during the weekly time frames. There are these small details which you do have to pay attention to if you want to spot these reversals occur in real time, right? So spotting them in real time will take experience. It's not really going to be an overnight thing. It's not just some information you're missing, but it's rather more related to the time you're willing to put into this craft, and you learn exactly why price does it. And as time moves on, you will be quite comfortable with figuring out when price is going to reverse and when it's going to retrace, when you could take a position, why price does need to react here, and you'll be able to form a clear story, right? Or a clear narrative, as they call it. So that is my advice for ES and NASDAQ, which is going to be leading bullish. And this is quite the trade you could take, right? Which is a swing trade. Right here, we do have a long and a short opportunity presented. And let's move towards gold now, all right? So I do see gold gap up or gap down. Your opinions? Okay, I do think a lot of gold traders are here. Everyone's interested in gold nowadays. So let me give you a quick insight on gold. So the first thing to note on gold is the weekly time frame, right? Well, let's begin from monthly. This will make it really clear for all of you. So you can see that we have expanded all the way through high, right? And if you had to plot your dealing range, you probably plot it from here or here because this is where the move began all the way to this high. So we do have a clear defined fair value gap, right? And that is all the way here, which is at 3,950. Let's make it an even 4,000. That is where gold should get to, all right? So on the weekly time frame, you can see that if you did learn some sort of market maker models, or you do have some sort of knowledge regarding the sell models and buy models, you can clearly see that we have fulfilled a buy side objective, and we should move lower to fulfill sell side objective, right? So let's make it an even 4,000. So let me just change these coordinates to 1,000. All right. This is where gold should get to. All right. So on a side note, I did call gold drop all the way from here. I did call gold drop all the way from here. And once again, from here. And for now, I am going to, and all of this was in the university, and there are live recorded videos of me calling this price move. It's on Twitter as well, a few of them. So you can go and check them out. Or else the recorded videos where I do explain why I'm expecting gold to drop all the way here is on the university video library. All right. So regarding gold now, right? So let me just show this to you for free on YouTube. Just look at the weekly time frame. All right. We have price taking out buy side liquidity right here. Okay. So price takes out buy side, while price also takes out sell side, right? So usually we call this an outside candle, where one particular candle takes out a previous week's high and a previous week's low. So in this case, during gold, what do you see which is quite important here? It's easily going to be this fair value, all right? This is where your eyes should draw towards. So we have a large fair value gap on the weekly time frame, and there is no other fair value gaps presented, right? So we do have a fair value gap here, which price did act as support, pushed higher. This was a drop here. This is the first drop. This is the second drop. This is your third drop. And this should be your last and final drop to the objective. Okay, so when you're looking at fair value gaps and you're trying to figure out a clear direction, this is a classic example of where price has just given us one fair value gap, right? Just this one. And the price has reacted quite successfully from the 50% level. Now, just because price did close above it, it doesn't mean it's going to move to these highs. That is just, once again, pattern trading. You do need to understand the overall context of price, right? So getting back to the weekly time frames, we have taken out the week before, we have taken out previous week's high and previous week's low, which means there is some sort of indecision in the markets, right? That's really what they try to call it, but that's not really what's happening. Price is just taken out buy side and sell side before the real move. So which means if anyone was bullish and they did not buy here, they would buy right here at the top, right? And anyone who was bearish, they have been taken out here as well. So the price has just engineered liquidity on both sides and taken them all out. And the previous week, you can see that price is pushed higher once again. So if you drop to the daily time frame, this gets quite interesting. We have price taking out buy sell liquidity first and second, right? And if you do look at this, it does look like a 3-drive pattern, right? We have 1, 2, and 3. It does look like a 3-drive pattern. It's not exactly it because this is not the first move, but price does take it out about 3 times, right? So buy side has been cleared out successfully, is what I'm trying to say. We did have a clear bullish fair value gap. Let me just move this so you can see this quite clearly. Price takes out here in the form of 3-drive pattern. This is your 3-drive right here. We have once, twice, and thrice, right? And what does price do right after that? It pushes through a bullish fair value gap, which is going to be right here. And this is your fair value gap, which should act as resistance if we're going to move lower, right? So price closes through, taps it as resistance, pushes lower. Retraces once again, taking out buy side and sell side both. Once again, retesting this exact fair value gap as resistance. So this was outlined live in the university, of course, but for now, do understand the logic behind what I'm trying to say. Price will not take out this high because it's been protected. So this high is protected. Price will, if it does retrace, will get to the closest fair value gap. So in this case, this fair value gap was fulfilled because price taps into it, pushes lower. So this fair value gap has done its job. Price reverses or retraces to the 50% of the stealing range, takes out buy sell liquidity here once again, and moves lower. So right now, it is quite clear that gold is going to move low, right? So hopefully the daily time frame does show you clearly what price is going to do, but the draw for gold is low, especially on the high time frames, because it's quite clear now. We're just basing this off of the 50% of this weekly fair value gap. All right, that's basically what we're doing. And we have previous week's low right here, and we have this low right here, and we have the final objective here at 4,000. So price should move lower. All right, that's the bias I'm going with for gold on the higher time frames. That is my expectations moving forward. Now, when will my expectations change? If price manages to close above this weekly fair value gap, right? Not just the 50%, I mean the entire fair value gap. Price starts pushing here, closes above this, then I would expect price to get to these highs and move higher once again. All right. So let's have a look at silver, and silver does look pretty much the same. We have clear buy side liquidity being taken out right here. We have engineered liquidity all the way here. We have a weekly fair value gap right here. So once again, the draw for silver is going to be lower, same as gold. Both of them are positively correlated. So if gold moves lower, silver should move lower. We have clear opening price. Price is pushed into it, taken out buy side liquidity, closed rather aggressively. So if price does need to push lower, it's going to get to 71,430 and probably to these levels right after. All right. That's really my bias for gold. Nothing else is worth watching. For silver, we did call silver all the way here. So in the daily time frame, it is quite better. So right before this drop, we did call silver. This was quite tricky, trickier than gold, but we did get that. And this move as well, right? This move was quite simple. We did have a nice change in state of delivery right here. That's what pushed price lower, taking out sell side. Once sell side was taken, we did have quite an aggressive retracement. This was expected, and this move lower is when I expected price to move lower, but it didn't. We'll have another retracement into this change in state of delivery again, and we should move lower, targeting all of these lows and to 57.965, right? That's my take on gold and silver, NASDAQ, ES, Euro, and dollar index, all right? So hopefully we've covered everything, but before we do conclude the stream, we will talk about Bitcoin as well. So these are the markets I do discuss every single day in the university. It's going to be Euro and GU and dollar index, and we have NASDAQ and ES, and of course, Bitcoin and Ethereum. So just have a look at this chart. What do you see here? You would first look at fair value gaps. Beautiful reaction. Once again, we should push through, right? Clearly, a great set of price action. These weekly fair value gaps have been performing really well on Bitcoin. Right here, we do have a fair value gap as well. And here, price taps it, pushes higher. And here, price taps it in, takes out liquidity once again, moves higher, right? See, weekly fair value gaps are performing really well with Bitcoin. And this is not really the only thing you can use, but just for the sake of the stream, to keep it simple, this is what we'll use for Bitcoin for now. And we have a bearish fair value gap. I am expecting lower prices for Bitcoin. That is all, right? I don't really believe Bitcoin is going to push higher this way. I think it's going to take its time. It's probably going to push lower, take out all of these lows as well, and then it's going to probably decide if we're going to retrace or if we're going to just crash all the way here, right? So I've been bearish on Bitcoin all the way from here. Why is that? Really simple. This was called out on Twitter as well, but once again, the live recording video is in the university. 3 drive pattern. Let me just move this. We have 1, 2, and 3. 3 drive pattern, price pushes through. This opening price is your change in state of delivery. Price gets in, crashes. Fair value gap. Consolidates, we expand, we consolidate, and we expand once again, which is exactly what happened here. We expanded, consolidated, expanded. Should be quite clear and easy, and it does look easy in hindsight, but we did call this out in real time, right? Once again, fair value gap pushes lower, 50% retracement should move low. Now you get a clear understanding, clear picture of why we're bearish on Bitcoin, right? Basically the exact same thing we used on dollar index, on Euro, on NASDAQ. That's what we use here on Bitcoin as well. Same goes for Ethereum, and Ethereum is quite interesting because it's quite more bearish than Bitcoin. So price takes out buy side here, all right? It also takes out buy side here. And once again, this is where your range theory does work. We have a range high, which is defined right there. So range low is going to be this low, right? So we have a defined low right here. This is where Ethereum should actually get to. It's going to be about $800, and it could probably get here and reverse from here. It's quite a possibility. Or it could get to this low and reverse as well, right? But sell side is expected, especially from my side. I don't really believe that Ethereum is going to reverse all the way from here, right? I don't see that happening. All right, so there have been a few more questions. All right, gold, gap up or gap down, your opinions. Okay, so I wouldn't really say that, a clear gap up or gap down. That would be gambling. I would wait for price to open first, consolidate, give me a clear liquidity pool to trade off of, and then I would take my call on that. All right, so if I have to come to a clear conclusion, as I just explained, I am bearish on gold. All right, I am bearish on gold. If that makes things easier, to previous week's low and then to these lows, right? a video on price fractals in different time frames. All right, so that's a question, and that is going to be quite difficult to explain right here. But just to keep it simple, and I'll probably make a video on fractals as well in the near future. But for now, what do you really mean by fractals is, so let's just look at gold, right? Since we're on this, where the fractal theory or price just repeating the exact same structure in different time frames is real. It does repeat clearly with the exact same frameworks, right? So to give you a clear example, so let's look at gold on this daily time frame. So we have price reaching a clear daily fair value gap. We have series of bullish candles before price moves lower. So this is your change in state of delivery, and price pushes low, right? So you're seeing this on the daily time frame. Now, without even looking at gold, I just know that if I drop down to, let's say, the 1 hour time frame, you're going to see the exact same thing present itself. So, okay, right here, we have this high, which is buy side being taken out, right? We have a series of up close candles, which is going to be your change in state of delivery. Price taps it in, pushes low. That is your fractal nature in price. And this is on the 1 hour time frame, right? It's not really going to repeat exactly as you expected, but it is going to repeat in terms of the components, right? You'll have your buy side being taken out, sell side being taken out. And there are a few concepts that do work on all time frames. And that is really where most of these theories or retail concepts fail to understand, because it's not really going to work in terms of patterns, right? So you can form patterns after price is played out on all time frames. So you can probably call this your triangle and a wedge or whatever. But the components that do repeat and the ones that you'll be able to identify and take advantage of is what really matters. So in this case, price takes buy side, closes through these up close candles, that's your change in state of delivery, and price moves lower, right? So this can be used in real time. The patterns, not so much. All right, so this is where we'll end the stream, and hopefully you all did enjoy the stream. There'll be more coming soon, and I'll probably start uploading videos as well. So just to clear things up, we are going to be bearish on Euro USD, leaning bearish, and we're going to be leaning bullish on dollar index. We are going to be bearish on gold, bearish on silver, and we are bearish on Bitcoin and Ethereum on the higher time frames. But on NASDAQ and ES, since we have reached new all-time highs, we are going to be cautious and wait for a topping structure to form before taking a real call on price, right? So that's where we'll end the stream. Thank you all for joining, and I will speak to you all soon. All right, do take care, guys.